Good morning, ladies and gentlemen. This is Butch Shorak, Options University, and it is Friday, October 26, 2012. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. So we are not a service that tells you what to trade. We are not implying or guaranteeing a profit. As always, do not trade with money that you cannot afford to lose. Let's take a look at the economic announcements which took place and will be taking place on Friday morning. We have GDP, we have consumer sentiment, both capable of moving the market in any way, shape, or form. However, since we are in election time, it may not move the market all that much. Jobless claims on Thursday morning at 8:30 gave the market a big jump, but it did not hold as the days went out. But labor numbers, jobless claims came in better than expected. So with that thought, let's take a look at the SPX, and we see that currently we are in a sideways trend, spending time above the moving average and below the moving average, not trading in that previous trading zone that we were in. And we see that we took a stop today, and we reached that level of around 1406, and as long as we trade in that area, we're fine. We could go as low as the 200-day moving average, which currently is at about 1380. So the SPX currently in a sideways trend, in a down cycle in that trend, with an outside day on Thursday, but at a higher high and a lower low, and much indecision in the market as we go into our election time. The election will have a determination on where the market's going as we go further, but currently in a down cycle. Taking a closer look as we look at a magnified view of this and going to a 1-month chart, we'll see what has happened in just the last 4 days. We were currently trading in a previous zone that went from 1430 till about 1480, and we see that when we were trading in that zone, we could look now for us going down to that lower level of around the 200-day moving average. That certainly was within reach. More likely, I'd expect us to go sideways until the election, and that's fully what I expect to see happen, is that we're not going to go anywhere until we determine what the next regime is going to be in our future and what effect that's going to have on Wall Street. We'll have to look to technical analysis to help us determine exactly what that's going to mean to us. And so we see the SPX trading sideways in a downward cycle, taking a temporary halt here at this level. So you see here it is right here, looking at it in a magnified 1-month level. We see that we've got a down cycle in a sideways trend, and we really have kind of bottomed out here at that 1406 level. An outside day where we had a higher high and a lower low. Much indecision in the market, and we'll see which way it's going to move to that. Could head for that 200-day moving average, and that would certainly be part of our down cycle, and would very likely change us to a down trend. But currently we're in that sideways trend. Look for higher highs and higher lows. We are oversold in this position, and we'll see whether we're going to get a bounce here or whether we're going to head down lower. All right, with that fact, let's see how the Dow held up. And we see that the Dow basically did not fare quite as well as the S&P, as we're much closer to that 200-day moving average with the Dow, which was down or was up for the day approximately 0.2%. NASDAQ actually hit the 200-day moving average and stalled out here, seeing whether we're going to get a move out of the NASDAQ. It moves bigger, it moves faster, and so if you start to see higher highs and higher lows, it very well could lead the overall market up. So watch for that bounce, as again we are oversold at this position, but it could stay oversold for a while as we have the big news coming up with the election. All right, with that, let's take a look at the rut and see what the rut is currently doing. And remember, the rut moves a bit faster. Russell 2000 moves faster than the overall market, came down to the 200-day moving average, and we see that we're in a definite downtrend on the Russell, spending time above and below the 30-day moving average, which we've been doing for a while. Bigger moves out of the Russell 2000 than we get out of the other two indexes. It's our small cap portion of the economy, and although this is supposed to be going into the strongest quarter of the year, we're going to see if that really happens as we have recession all over the world. And so we've got a trading range on the VIX that basically we're in that normal trading range. The bonds are pulling back as the market's pulling back. That happens in October sometimes. Usually there's an inverse relationship, but looking at TLT, we see that we're just basically sitting at that 200-day moving average and following the overall markets, which many times there's an inverse relationship between the two. Financials showing good relative strength, very, very favored by QE3, which Bernanke brought in the last Fed announcement. This Fed announcement, which just took place this week, basically offered us almost nothing as far as the market, barely a knee kick as the announcement came out. But financials looking strong relative to the overall market, still trading well above that 50-day moving average, in fact hanging around that 30-day moving average, and more room to the upside out of our financials. Oil trading down, not anywhere near the highs that it was in September, so it definitely has pulled back with the overall market. Again, everything waiting for the election to come through to determine where these international monies, you might call oil, is going to head. So with that, we see USO trading down, going sideways for the last couple of days, and that safe haven of gold not showing much fear in the market as we're in a downtrend and are not anywhere near the high that we were at the beginning of October. So gold kind of pulling back, headed back for that 200-day moving average, had a little bit of a bounce today as there was some real indecision in the market as to where it wanted to go. And finally, looking at the volume on Thursday, we saw that it didn't have any great volume, trading basically at about average volume, as again we're waiting just below that previous trading range to determine where's the market going to go, what's the new regime going to bring us, is it going down to the 200-day moving average. Time will tell as we wait for that move in the market. All right, so we've looked at the SPY. Next, let's take a look at some of the other stocks that are of interest to us. Meanwhile, we see that the spider is just hanging out there waiting for the indecision to be over with this election. What is the regime going to bring us as the election becomes the big newsmaker, which will occur within the next 12 days? So is that 200-day moving average going to be reached or not? Watch for a breakout from this 3-day sideways trend. Look for higher highs and higher lows, or lower highs and lower lows headed for that 200-day moving average. That's what you can look for confirmation. For those of you that are gold members, stick around. We'll look at our stocks to watch, see how they're faring with this last 3 days of a sideways trend after a down cycle, and see which are our market leaders and which are our market dogs as we look at the stocks to watch for you gold members. So with that thought in mind, we can only say the election is coming, and this is Options University, and this is Butch Shorak. And with that thought, thank you for being here with Options University. Gold members, stick around. Let's take a look at the SPX and see what kind of changes. And to our gold members, welcome back. Let's take a look at the SPX and see what kind of changes we've had since we looked last Monday. Notice we had support last Monday at 1431. We've gone through that. We went through the support at 1417, and we are probably headed for support at 1400, probably more accurately 1398. Currently, we're sitting at one of those intermediary support levels at 1406. Today we had an outside day, gapped up with good news from the labor market, and and then continued to find new lows for the day as we had an outside day and basically had some kind of what one might call a spinning top with indecision in the market as we seem to be heading a bit sideways here in this overall sideways trend as we're spending time above and below the 30-day moving average as we shift from that uptrend which we've had all summer long. Basically, you can expect for this market to hit 1398 before we run into the election. We are a bit oversold at this point. Don't be surprised to have a bit of a bounce. And we could have that prior to the election, and then as we go into the election, head back down to 1398 and maybe even to our 200-day moving average, which by that time should be above 1380. So those are what we see currently in the market in the SPX. And remember, the SPX certainly controls a lot of the other stocks that we watch, many of whom follow the SPX for their bounces. And for you short-term traders and option traders, this provides very valuable information as to when to get in, when to get out, looking for those pivots, looking for coordination between the overall market and the stocks that you're watching. Now let's take a look at Amazon. We see that Amazon had earnings. It had a rundown down into earnings. Disappointed with earnings. We'll find out where Amazon opens tomorrow morning. 200-day moving average is sitting there waiting, and so that's down about 215. We've lost a lot of that pizzazz that we had out of Amazon after the last earnings. So remember, these can completely change their perspective and the type of stock that they are when we have these earning announcements. Therefore, the rule do not hold through earnings. After looking at Amazon, let's head to Applenomics. Had its announcement after the market today, and we see that as it gave us our announcement after market, we see that it missed, and we'll find out where Apple's going to trade tomorrow. Will they consider, we're basically down about 100 points from the highs from Apple. Will they consider this a buying opportunity, or will Apple continue on down, maybe down to that 200-day moving average before it bounces? Apple, nothing wrong with it. It has a little strike that it's dealing with in China, getting trouble getting delivery on its iPhones. Disappointed a little bit on earnings. I think beat revenues, and so where will Apple go? Be a technical analyst and find out what it's going to tell you. Look for that pivot to the top side, and many people may look at this as a buying opportunity as Apple has pulled back. Nothing could look better than the future for Apple. Autozone going no place. Don't have anything to say about it unless you use one of your strategies for a stock that's going absolutely nowhere. A little volatility out of Autozone. You could play the pivots on it. You could do covered calls when it hits resistance. Next, let's take a look at CMG. Already had earnings. What did Wall Street think of their earnings? There's your volume spike, and there's your gap. Many times it'll go back and fill that gap, but so far CMG isn't showing us much of anything. If we get above this high right here, that could be a buy signal to potentially fill the gap. But remember, it's much safer to play this stock to the downside as it's lost its pizzazz, bouncing off the 200-day well, actually, that's not a 200-day moving average. Bouncing, yes, it is the 200-day moving average. So let's see, 200-day is at 300. No, that's not the 200-day moving average. Where is the blue line for the 200-day moving average? Certainly going sideways. Yeah, there it is. All right, so with that thought in mind, CMG definitely in a downtrend, didn't have great earnings, and that food giant is not showing any of the pizzazz that it once did. Next, let's take a look at Google. Google had earnings. What did they think of them? Big volume, sell off, change the looks of that stock. Going sideways as the market's going sideways, will bounce with the overall market, but we'll see whether it can pick up its pizzazz. It certainly had it after the last earnings announcement. Doesn't seem to have anywhere near that same kind of pizzazz after this earnings announcement. Google, a stock that can move, and play the pivots on it. Green Mountain Coffee going absolutely nowhere. Use some of your strategies for stocks that go nowhere. Take a look at your butterflies. See if you can get some premium out of this stock and take care of time decay and theta on Green Mountain Coffee. Earnings coming up right around the 1st of November. Keep that in mind. Do not hold through earnings. ISRG. Wow. Earnings, volume, gap up, moving higher, market going, pulling back the last few days. This stock, which way did it go? Up and sideways. Strong stock relative to the overall market. As market moves up, this certainly has the capabilities of moving up. Looks like it could be changing this whole philosophy where the moving averages are. Could end up with the 30 above the 50, which is above the 200. Stock showing lots of strength relative to the overall market. Let's take a look at another stock that's showing us good strength relative to the overall market. Bernanke treated this stock well as he announced QE3, and the name of the stock is MasterCard. Earnings coming out on 10/31. No earnings run out of it whatsoever. Sitting at the 50-day moving average. If the market does get a bounce, watch for a higher high, higher low. That's your entrance point. And see if you can take a few bucks out of this as it's headed up towards earnings. Could have a little bit of an earnings run as it's a good-looking stock. Pull back with the overall market. Watch for a confirmation on this before you get into it. And here we are, earnings on 10/31. Be out, do not hold through earnings. Next, let's take a look at another food chain, the largest food and restaurant in the world. That is McDonald's. Where is McDonald's going? Oof. Lower. Sell bounces on McDonald's. Not looking healthy, not looking great. Let's talk about a stock that just does it. That's Nike. See if it's doing it, and it's not. Downward trending stock, not showing us any strength. 200-day moving average up there, 50-day moving average there, 30-day moving average there, headed lower. Might get a little bit of bounce once it hits this lower area of support down here. And then if you start getting lower lows and lower highs, that's your entrance on this stock. Be patient, wait for the proper entry on a pivot to the downside. Nike, not showing us the strength it once showed us. Priceline, looking at Priceline, where has it gone? When are earnings? 11.5. Never did fill that gap from the last quarter, and kind of sitting here down on support, not showing us a great deal of volume. And going into earnings, could this have a little earnings run? It usually does. What are you looking for? You're looking for a pivot to the upside. We'll need market cooperation to get that out of Priceline, as it has lost some of its travel, news, and European business. And finally, let's take a look at W.W. Grainger, one of those stability stocks, and see what it has done. It had earnings on 10/16. There was the volume surge right there on the earnings day. Did they like the earnings? They didn't. But boy, for a stock that opened up this low, bounced back nicely in that trading zone. That's your trading zone on W.W. Grainger, 210. There's support at 197.50. Look for a pivot to the upside, and you can play this to the upside, and you can play this back down once it reaches resistance. As soon as you get a pivot up there and a confirmation with a lower low, lower high, W.W. Grainger is going to move with the market. It is one of the stable stocks in our overall portfolio. So with that thought, what's the word? The word is the election. How far away is it? Just a couple weeks, and I expect that the market should pretty much go sideways until we get the results from that election. Which way will it go, depending on who gets elected? I don't have the foggiest idea. Usually, in past election years, if the incumbent gets elected, the market does tend to look on that favorably. I don't have any feeling whatsoever. We need to be technical analysts to take a look at this. Be a good technician. Sideways until the election, and then after that, hang on. We'll have to figure out which way the market's going to go. So with that thought, this is Butch Shorak. It's Options University. We're happy that you're here. It's Friday, October 26, 2012, and thank you.